Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
All right. Hey guys, welcome back to our show. I'm your host, John Harcar, and I'm here today with Stewart Heath. And what we're going to talk about, besides his journey in business and real estate, we're going to discuss the 5 reasons why all entrepreneurs should be passively investing in real estate. Remember, guys, at Investor Fuel, we help real estate investors, service providers, really all real estate entrepreneurs 2 to 5x their business by providing the tools and resources to help grow the business they want to grow and, in turn, live the lives that they want to live. Stewart, man, welcome to our show.
Hey, thanks a lot for having me here. It's really an honor to be asked to be on your show. Really appreciate it.
And I appreciate you coming on. And, you know, I'm very looking forward to the 5 reasons. You know, I had saw that on your website. I thought that'd be a great topic. But, you know, before we get into that, right, and get into the weeds, why don't you give our audience a little background on you, right? You know, your experience in business and real estate and, you know, kind of what got you up to today.
Sure. Well, I'm old now, so that can take a while. But as it says down there, I'm a CPA. My dad was a CPA. I really had no clue what he did, but I thought it sounded good when I was in college. And came out and got my CPA and started doing public accounting. I'm like, oh my God, I hate this because I'm far more entrepreneurial than my dad ever was. So, so I ended up taking after my mother, and who was quite the entrepreneur. But anyway, so what that really means is along my CPA journey, I've actually started many businesses along the way. A couple of which are still in existence, but you know, always trying, always taking risks, always doing this stuff. So, really, at one point, found real estate and fell in love with it just because of the numbers, because of the predictability, because of the creativity you can apply to it, and it's kind of almost accidental that I found it in that. So I got out of college in 1985, less than a year after that, they passed the 1986 Tax Act, which many people may recall, many people my age, that destroyed investor real estate, you know, for a few years, really. It was retroactive. They were doing the right thing. I think the retroactive was a bit too far because there was some abusive tax provisions, you know, where you could write off, you know, 4 times what your at-risk basis was. I mean, it just didn't make sense. It was abusive. Yeah. But the way they fixed it was almost equally abusive. And I'm a baby in business at this point, and I'm soaking it all in, and I'm going to meetings and listening to bankers tell us that real estate is bad and they don't lend on real estate anymore. And I'm okay. I'm writing all this down like it's gospel. And and that it all made sense to me. I mean, it makes no sense to me now. I mean, I guess they prefer collateral that has wheels and can leave the state and stuff like that.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
I was with a big accounting firm, Pricewaterhouse at the time, and figured at the age of 25, I knew everything, so I started my own firm, and immediately started picking up several clients in the real estate business. I had contractors and realtors who were doing fix and flips, and guys who were doing all the kinds of stuff, and we're cooking along pretty well, and it dawns on me, in the middle of tax season one evening, that all of these people are in real estate, which is bad, and they're making all kinds of money and they're not paying any taxes. And I know they're not paying any taxes because I'm doing
their taxes.
And I'm like, something doesn't jive here. And so I began to dabble, and I found a guy who was selling a duplex in my hometown. It was in the hood, and I thought, well, this will be fun. So I gave him like a couple of $1,000, and he carried the rest of the note, and I was hooked. I absolutely loved the process, and so I became a landlord. And then within a year, I took those 2 units, and then I had 30 units, and next thing you know, I'm building houses, got a contractor's license, and all the while I'm practicing as a CPA too. And then we started doing development, and got to actually bought and ran a property management company as well. And I'd gotten our personal portfolio up to about 200 units, and at the beginning of 2007, and I'm doing all of this just on a few $1,000s and the good graces from every bank that I could find. So you can probably see where we're headed here. So
right,
and sort of and then I also realized at that time, all these residential units was the nearest definition of hell on earth I could imagine. So didn't like multifamily, but anyway, it was a sizable portfolio, and then in the second half of 2008, long story short, banks stopped lending. People were calling lines of credit, and so anyway, I went through a pretty massive reversal. Ended up giving all that stuff back to banks and stuff, and I wasn't doing it right. I'm not blaming anybody. I was doing it all with no reserves and hardly any equity, and that's not the way you should do any business.
Right.
But I was convinced that, well, everything's always going to keep going up and to the right, isn't it? But the merry-go-round stopped. So anyway, I go back and I take on some C-level positions, and all the while I'm still loving real estate. Really, just want to get back into it, and did that in 2020.
So real quick, I apologize for interrupting. So at this point, did you sell all your doors, or are all your doors gone now?
I don't have any of those anymore. I basically I took a bankruptcy and I lost it all.
Okay.
So and so anyway, major life changes and C-level jobs, get back into it, and here comes COVID, and I was just starting to get back to it. But anyway, COVID delayed everything a little bit. But in 2022, I had formed Harvard Grace Capital, and started talking to some partners and said, all right, we're going to do this right this time. We're going to have reserves, we're going to have equity. And so in 2022, we bought our first couple of deals.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And I did about 15 million in assets that year. And fast forward, our focus is all on stabilized assets, fixed rate instruments, fixed rate debt. We're not doing any development, and so that's been our focus. And so from 2022 to now, we've now got $40 million of assets under management. We've raised about 15 million in equity, so those ratios look a lot better. Everything is operating; it's full. We've not had to reduce or stop any distributions to our investors, which so many of my colleagues has, and I'm not poking fun at them at all because. I think the Fed kind of did a number on us with.
Oh yeah.
Who would have gone into a deal expecting interest rates to rise 5.5 points in a year and a half?
Exactly.
Yeah, nobody does. So,
right.
But anyway, I feel fortunate that we're in good space. So that's my journey.
I love it.
Yeah. So still love real estate.
Such a great story. And I love the perseverance. I mean, where did you get your work ethic from? I mean, you kept going and plugging through ups, downs, drops.
Oh, my parents, it was just, call it tough love, call it whatever you want. Just call it, being raised by two, depression survivors, but the best expression I've had, well, you can't fall off the floor, so you may as well stand up and go somewhere. So, I
love that saying. Is that you? Did you make that up or did you find that somewhere?
No, actually, one of my college roommates told me that, what years ago, and I've only applied it here, 30 years hence.
That's awesome. What type of, are there any specific kind of mindset tools or just a routines or something for you that just kind of keep you in that go forward mode?
No, I would say that my faith has a great deal to do with it all. I've not had mindset coaches or any kind of tools like that. I'm not opposed to those. They just didn't feel right to me. But I do spend a great deal of time talking with people in my church, my faith, my wife, and in prayer, and just sort of discerning what's the next right thing to do, and given the entrepreneurial nature I have, I'm always biased to action, and unfortunately, action usually is risk taking. So, but you can take risk and be smart about it. So
right.
That's what we've done this next go round.
Cool. Yeah. Before we start talking about the 5 reasons, tell us a little bit about Harvard Grace.
Yeah. So Harvard Grace actually started Harvard Grace Corp in 2010 after my bankruptcy to go back and do fractional CFO work, which I used it for that. I ended up taking a job, so it just lay dormant until about 2017, and so really it just became a consulting enterprise. We made a ton of money during COVID doing PPP loans and stuff like that for people.
Right.
It grew my client base during that, but all the way and in 2020 and 2021, I was like, I don't want any more clients. I want to do real estate. But you gotta make hay while the sun's shining, as they say. So and so then we formed Harvard Grace Capital, which is now the main operating entity. that we operate out of. So
okay, and then with that, you said fractional CFO. What else are you doing?
We were doing some cost segregation studies along.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Way, but we haven't done that for several years.
Oh, okay.
But we have very little consulting income these days.
Awesome. Where are you? You're located in Tennessee. Is that where all your properties are? Are you a virtual business as well?
Yeah, we like to call we are a virtual business, and all of my employees are remote as well.
Okay.
Right now, our holdings are from Spring Hill, Tennessee, which is about 20 miles south of Nashville, down through Birmingham. So
Okay.
we've got 9 properties across that spectrum. And one of the ways we're different in that we have focused on a geography. I've lived my life up and down I-65, really from childhood to now, and feel like I should just be in an RV and drive up and down that interstate.
You know, like the back of your hand.
Yeah, and so we focus on this geography that we know very well. We're asset class opportunistic.
Yep.
And so, the first deal we ever did was office, and in 2022, people are kind of, "Are you crazy?" I said, "Well, I've managed this building for a client for 4 years, and it's full. It was full throughout the pandemic. It's full now. It's still full today."
No.
I mean, it's a classic location story. It's a suburban office in Spring Hill, and it's filled up with doctors and dentists and other service retail type customers.
Right. Okay, so and once again, we'll get to our topic here in a second, but just for people listening that might be in there, what are you buying? Like, what's your buy box right now? What does it look like so people can bring you some deals?
Yeah. Right now, our focus is on medical office. We just love that class, and we like some retail too. So
Okay.
Retail came out of COVID really underbuilt in a lot of, and so the rent rates on retail have gone sky high, and there's still not a lot being built. Mm-hmm. And so the demand for retail space. So we're looking for anything that we can cash flow from day one, and so we like those type of assets, but really anything that has a good cap rate going in, good for us, is really what it's about the numbers when you really get down to it. So
very cool. All right, 5 reasons. Let's go.
5 reasons. So this is from a piece that we put together a few years ago, because our target investor is which it's quote busy professionals, but we really think entrepreneurs. Mm-hmm. And entrepreneur, being one, I think I understand most of them. We all tend to be too heavily invested in our own business, in our latest creation. Unless you're one of the guys who have started the business and had an exit or two and is sitting on a pile of cash while you're doing your new business, you're probably 100% invested in whatever company you're running right now.
Right.
And we think that that's a mistake. One of the things we try to coach people on is building your portfolio, your investment intentionally. So the 5 reasons are this: diversification, passive income, income tax benefits, and inflation hedge and professional management. So those are the 5 reasons.
Okay.
And we just encourage people to build their portfolio correctly, and we think step one is you have a foundation in your portfolio of cash flowing assets. Cash flowing assets tend to be more stable. They're not as subject to volatility, like in the stock market. If you look at dividend paying stocks, they tend to be more price stable than the Googles and the Apples and than the ones that don't pay dividends.
Right.
They will still move, the dividend paying stocks. Obviously, we think the best cash flowing asset out there is real estate, although we're open to other forms that you may find along the way. But cash flow tends to be stable.
Right.
And that is the business that Herberger's Capital is in. We are providing those type of investments.
Okay.
We're not against development. We're not against other types of higher return, more risk assets. We just think you need to have that foundation first. So, and that's certainly what's behind all of these 5 reasons. Diversification, you need to diversify from that one thing.
Yeah.
Where all of your eggs are in one basket. You've heard this before, and not just go buy one piece of property. You should probably be in several different pieces of property. Yeah. If not 5, maybe 10 or 20. Depending on what your investable cash flow is. Put $50,000 in a lot of different private deals, and the passive income. Well, you can be a whole lot even more entrepreneurial if you're not needing to make a living out of your latest creation, your latest deal. So you should begin to generate other streams of income that are not dependent really upon your efforts or upon the business that you're creating. Right. So generate new streams of income. The income tax benefits from real estate are unparalleled. Even with our boring stabilized properties, we're going to do a cost segregation study. We're going to shelter that income for at least the first 3 years, where you won't pay tax on the 6 or 7 or 8% cash on cash return you get. And so when you're not paying tax, that turns those returns into 10s, 11s, and 12 equivalent returns without tax.
Sure, yeah.
And that's just the beginning. You've got the ability to do 1031 exchanges. You've got the ability to defer or shelter tax in many different ways using real estate, which you don't get with some forms. You don't get that through a REIT.
Right.
Through a public REIT, those tax benefits do not flow to you. Inflation hedge. Real estate, to me, is, I'm not sure if it's the only, but it's certainly the best inflation hedge. And I like to joke about being old. I came out of school in the 80s when we were just at the end of Jimmy Carter's misery index, where we had double-digit inflation and double-digit interest rates. And so I sort of grew up with inflation. We all do it. But we've had a couple of generations of people younger than us that really had no inkling of what inflation was until it hit us again in 2022.
Yeah.
And then where we found a lot of opportunities in buying some of our assets is people who were not raising rates on their real estate. We bought some stuff from people who hadn't raised their interest rate and their rental rates for 14 years. But they think it's still worth what it's worth today. But now you got to live through those leases but when you structure your leases right, and you provide for appropriate pass-through of costs, you've got an inflation hedge.
Yeah.
And you're passing it all on to your tenants. And really, they don't have any other options because most people are managing their real estate correctly. And the 5th reason, professional management, and that's what we bring. You're a professional manager of your business. You know what you're doing, and trust other managers. Just if you put $1 million in the market, and you're going to hire a money manager or a financial advisor. They're professionals at what they do. There are many professionals that know how to run real estate. and do exactly what I was just talking about. The real estate's only worth the amount of money it's going to make for you, and what you want is to have it be the most you can possibly get, and that's through a properly structured lease and the appropriate management of costs and expenses. So to maximize that income, and that is a full-time job. and
Yeah.
And you want it to be passive. Going back to our point number 2, you don't want to have to worry about that, but you do want to find a good manager who will optimize that income for you. So those are the 5 reasons we think entrepreneurs should be investing passively in real estate. It obviously doesn't just apply to entrepreneurs, but
Sure.
But those are the key reasons we think people should consider real estate.
Awesome, man. Such great information. Thank you so much, Stuart, for coming on and sharing with all this.
Yeah.
If there's folks out there listening that maybe want to talk to you more about it, maybe have a deal in your area, how can they reach out to you?
Yeah, thank you for that. The best way to get me is our website, harvardgrace.com. You can find these resources that we were just talking about there. You can find my Calendly link there. And I do invite anybody and everybody to book some time with me, because I can talk your ear off of real estate forever, and we'll become friends.
I love it.
Maybe do a deal someday. So
there we go. I love it. Well, Stewart, man, thank you again for sharing with us today, guys. I hope you enjoyed the show. Hope you took some good notes, and I really enjoyed it. And I'll look forward to seeing you all on the next one. Cheers.
Thanks, Joe.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.